This is the Note Closer Show, where you get the latest developments in distressed note investing and learn the secrets of how you can control millions of dollars worth of property for pennies on the dollar. Get educated and entertained by someone who has closed thousands of deals and lives to support you in achieving the same. Now, here's your host, CEO of We Close Notes, Scott Carson.
Good morning, good afternoon, good evening, everybody. Welcome to this episode of the Note Closer Show. As always, Scott Carson, excited to be here today. And I'm really jacked up and excited to have somebody who's doing an amazing. She's an absolute powerhouse when it comes to what she is doing with her and her teams and her, staff and the amazing people that she leads out of the Atlanta market. And we all know Atlanta, hot Atlanta, as we like to say, is a hotbed of real estate deals. We always have so many investors that are loving investing in Georgia. Obviously, as a note investor, it's one of the fastest foreclosure states out there. It's got a couple, tricky little things they want you to do as a note investor. But I wanted to bring on somebody who is absolutely killing it. She is running an investment team in brokerage sales there in Marietta, Georgia, and has been renovating and wholesaling homes for over 18 years. She's also a note investor, but she's also a big marketer. And that's one of the big things that I love about what she is doing with her national blogs, different events, coaching, and her. A couple of my buddies are doing an amazing job with their podcast as well out there. So we are honored and, as always, excited to have Amy Ransdell joining us this morning. What's going on, Amy? How you doing today?
Well, first, I'm doing great. Thank you for asking, and thank you for having me. This is awesome. When you reached out, I'm like, oh yeah, I would totally do your show. This is awesome. You're great content that I enjoy. So thank you for having me.
Well, thank you very much. But one of the things, let's dive into some stuff. It is you and I were talking beforehand, and we'll get into some of the systems that you are a fan of, and then also cracks that we see in our systems, because we were joking about that, how most people think we always got to have everything together, and that's not always the case. We learn so much. Sorry, what was that, Amy?
That people think we do.
Yeah, exactly. Let's keep them thinking that. But let's talk a little bit about where are you seeing the Atlanta market. You're doing some amazing things, wholesaling, fixing, flipping homes. You're also a note investor out that neck of the woods. Where do you see kind of Atlanta being at right now for you?
Well, okay, so we've just come through a crazy event, so I guess let's talk timely, right? With COVID and so forth. In Georgia, I will say we had a little bit of an advantage because real estate was considered a essential business. So we didn't have to completely freeze, although it did really change the game of how we applied ourselves. What we're watching right now is not only what's happening right now, but what's going to come in the next 3, 6, 9, 12 months, 18, 24 months. Like those are some, when there's a massive economic event that we just had, there's going to be a natural progression of events that come from it before it heals itself. And so right now in Atlanta, we're experiencing just a massive real estate crazy night. It's like a boom, it's this, but it's a blip. And so we'll talk about that in a second, but we're having a lot of activity. Inventory is really low. If a buyer's in the market right now, they're a serious buyer because they're willing to go out there and look even with COVID, right? So that's something important. And of course, interest rates being at historical lows and going to hit even deeper lows, we all presume, then this is a market where everybody is just pushing. So we're seeing multiple offers, over list price is a consistent thing that's happening at this moment, right? So, which is pretty good.
Are you seeing the most amount of the most activity in your first time? Or are you talking, 500,000 or less? Or let's talk kind of maybe some of the specific numbers of the Atlanta market, kind of the price range and stuff like days on market, stuff like that for you. So
really, really good question. So in our market, jumbo loans start at 510 here. We don't have, first time home buyer is going to be 175 to 275 and so forth. And almost every market, and I can say this and not be all inclusive and looked at like I'm the dummy for saying this, but in almost every market, there is a need for housing at the lower end, okay? So it's highly competitive here to find properties to flip on the lower end that are gonna go retail flips. It's highly competitive to find rental properties because same thing, right? Although we are a fairly good market, fairly diverse for finding positive cash flow property. But I will say that's always going to be a pocket. Anybody in any market should go figure out what that range is in your area and see if you can make that happen. So in certain micro markets in Atlanta, it's really powerful to find property to flip or sell that let's just put it this way, there are aggressive investors who are, adding on square footage and making these houses much bigger to go for these bigger ARVs. But the reality is there's a very low amount of inventory for the smaller footprint properties and a lot of buyers that want those. So same thing, if you can figure out what those little ranges are, then you got a really hot place to play in, okay? Once you get over about 550, 575, just about everywhere, we're seeing longer days on market, we're seeing price reductions, and really if you want to win at the higher price point, you better have a stellar product. I mean, stellar. It's got to have a great living plan, be really well done. If you're a retail listing, you better do everything your agent says to make sure that property is very marketable, because it's not going to move as quickly unless it stands out from the crowd. So I don't know if that answered you, but that's what we're saying.
That's exactly what we're looking for. Yes, it definitely is. Good stuff out there for everybody.
Let me just add to everybody listening, like I'm a total nerd. I'm a complete and utter numbers nerd. I just am. So if you're not a nerd, find somebody that is, that likes to study the numbers, and study your different micro markets. Don't listen to macro projections. It doesn't apply. I don't want to hear a national projection. I don't even want to hear a statewide projection. I don't even want to hear a citywide projection. Every small micro market is going to have its numbers, its saturation of inventory. Really get to know your markets, right? Like drive around in that market or get somebody boots on the ground that can do that for you. And if I see tons of dumpsters and temporary power poles in a market, guess what that means? That means that we're going to have an inventory push come, and that's going to push prices down on days on market out. Like you just want to, you want to know your market and study it.
Yeah, that's great stuff there. And that kind of dives into my next question there with such a need for affordable first-time housing. We see the same thing in many different markets across the grid, especially here in Austin, Texas. But with your experience, and you look back at history, I think back to 2008 and 9, what was going on, because we had a big growth. Have you seen a lot of new communities, new housing, first-time home buyer opportunities sprout up over the last couple of years?
In Atlanta, there's been a ton, right? One thing about Atlanta is that we don't have any geographic restrictions, right? We're just this big, sprawling, fat city, right? So we really go all the way from Alabama to, we go from every state line. It's greater Atlanta, right? So yes, there's been a lot of construction starts over the years. Construction inventory, there has been some ups and downs where there's been an over excess of construction inventory, and we watch that, right? Construction numbers are really the first ones to watch before you start watching the rest of the retail numbers. At the moment, we're seeing a lot of construction starts way outside the city, and I think that's in direct response to builders and developers assuming people want to get out of the city after dealing with COVID, and then of course all the protests and so forth that happen here in Atlanta particularly. So I don't, we're going to continue to watch that, right? One of the challenges with the construction starts, though, is that there's already quite a bit of, that's what I'm looking for, backlog on construction material. So because of COVID, just like we have some meat shortages and dairy shortages and things being predicted and already being experienced, there's also lumber and material and supply shortages because a lot of those places closed down for COVID, and same thing, they're backlogged on orders. So anyway, yes, there is inventory outside, particularly the city, for that first-time home buyer. Affordable housing, now that's something else. Anybody here that's listening, that's a great niche to get into. There's huge government grants and all kinds of things that can come your way where the entire project is basically paid for. Like, it's no joke. I mean, affordable housing can be very profitable. It sounds like an oxymoron. I'm going to go build affordable housing and it's profitable, but it can be.
Yeah, I agree there. You just got to make sure you're checking out things. One of the things that always concerns me is the things that we've been tracking over the last 12 months. A lot of times has been the kind of the rollback to, as little down as possible, $500 down, $1,000 down, or, I was even talking before all this back with a guy at Bank of America who was talking about how they were donating the down payment on an FHA mortgage and then giving up to $7,500 worth of closing costs. And I'm like, oh my gosh, the ex-mortgage banker in me is like, thinking back to 2008, 9, and 10.
Deja vu.
Yeah, exactly. And have you seen things like that pop up there with people getting in for as little down and as little skin in the game as possible? I mean, it's a beautiful thing, but then it always worries me when we have things like this happen where now they're in forbearance agreements not paying, or even when the tax values come back, now that they're being taxed on the full value and improvements of the property versus just the land. Do you foresee kind of that's a little bit of start of the wave in some of those areas in those parts around Atlanta?
Yeah, in fact, we were talking about this before COVID.
Okay.
I mean, we really were like those, again, now you and I we have experience on our side in the sense that I've been through several market corrections or shifts in my career. And I very clearly remember the '08 world, right? So I was very heavily involved in short sales at the time. I happened to be on an advantage during that shift because of the niche that we were working primarily. But we all remember how loose lending was. And so we were watching lending become looser and looser and already saying to ourselves that that's going to create a wave of potential defaults, et cetera. Not necessarily in the short sale arena like we saw before, where there's just an overwhelming amount of zero equity properties all of a sudden and so forth, but still seeing a lot of people who would end up in that mortgage late scenario. So we end up with a more motivated seller pool. And so we were pulling back out a lot of our transaction engineering of how to make money with pretty houses and all kinds of things, right? Because those start to become strategies you want to pull back out. But yeah, that already a conversation. Now we sit here with COVID and we had everybody get unemployment or stimulus, okay? And so we're seeing this little blip of a lower unemployment number and everybody's going back to work, but not really. The real numbers are going to come in a few months when anybody that was living on savings, that savings now gone, they've gotten complacent, they've not really put together any proactive efforts to be in a good financial position. And you have a lot of companies who are going to do those permanent layoffs, permanent salary reductions, or they're going to close their doors. And so that's going to create a wave of people who were in these situations where they put no money down. And those are going to be your default waves. So we are all prepared and strategically for there to be a wave of defaults and foreclosures. So.
Yeah, I want to say, wait. I think everybody's breathlessly waiting to see what's going to happen and shake out from the government. Who's going to get bailed out? Who's going to be saved? How big a check is the government write to the banks? But I think there's going to be a lot of people that, especially not just borrowers, but also owners, landlords, smaller investment companies, or even smaller real estate investors who have owner financed their properties, and now they're not getting the aspect of the bailout and things like that.
Right.
Any insight on that you'd like to throw into there with your geekdom? And I love your geekdom. I love your numbers aspect of things like that. You and I are fellow geeks.
Yeah, good. All right, cool. Yeah, I'm a little crazy like that. And I love studying economics, but I was a biochem major that got an art degree. It's a long story. I probably should have studied economics, but okay. So I told you I'm a complete nerd. All right. So I will say this. You said something about the landlords, things like that. Again, this is a trickle down effect. This is a natural impact, a series of events that have to happen. So there were a lot of statistics that most rents were paid still at a 75% pay rate during COVID. And a lot of people were shocked because one of the first things they thought was that nobody would pay their rent anywhere across the country, but that wasn't true. And stimulus checks and so forth seem to have been applied towards doing that. Okay, but again, there was stimulus and support happening. When the real numbers start happening where people are actually really affected, then they stop paying the rents. And that's when you start seeing the landlords where they can't pay the mortgages or the owner finance payments or the wraps or whatever structure they put themselves in. And then we start seeing a wave from that, right? We see those landlords that are in those break-even landlords where they can't really afford to do their repairs and assessments and so forth. That's actually a negative cash position for them. They may be benefiting from a tax position or some equity gain, but they're still in a negative monthly cash flow position. Those are the guys that are going to start wanting to just kind of get rid of property, right? We're also going to see a wave of hard money stuff kind of hit the market on a default, right? There's a lot of that already coming. As a note person, I'm getting brought lists of default properties. Hey, do you want to buy these? Right? And I'm shocked. Like I'm looking at the addresses and I'm like, oh gosh, I know these houses. Oh, I know that borrower, right? But it's those waves are coming.
Well, I'm glad you brought that up because that was the next question. I'm sure you're seeing an increase in mezzanine financing, hard money loans starting to roll out there too, huh?
Oh yeah, for sure. So so you talk about retail lending and how loose it was getting again, right? Still not. Let's give the banks some credit. They did learn some lessons in '08, okay? right? So even though they were lowering rates, lowering down payment requirements and so forth, and opening up some no doc loan type products again, they still were not 100% like it was in '08. I mean, in '08, I could be like, I don't know, a guy who collected worms, and I could buy $1 million house, right? Like you really could, right? Oh, and I could buy 3 or 4 of them, hey, why not? Okay. All right. So it's different. Even with in that situation, the lenders were doing more due diligence to make sure that the borrower did have a DTI ratio that could support it. They did have verifiable income of some form or another. I mean, they were doing a lot more. So I'll give them some credit. I'll give them some props. But in the hard money side, oh my goodness. And this is like institutionally backed funding. And I'm watching this happen and I'm just breaking my heart, where they're giving these crazy rate hard money loans and even dropping the interest rates just because it's got so competitive,
right?
Letting newbie investors come in with no experience whatsoever or fake experience because they'd bring in a quote unquote partner on the LLC that had experience, right? And I was watching all these things happen and I'm like, oh my goodness. And so now you drive through neighborhoods and there's lots of projects that are boarded up and unfinished. And it's because it was a borrower who really wasn't in a cash rich enough position to handle the hard money scenario, didn't know how to actually put a property through production and stay in budget and so forth, and didn't know what they were doing, right? And I watched hard money lenders also. I feel personally, I watched some inflations of appraisals and things like that, or they push ARV appraisals because wholesalers and so forth sourcing, they were pushing the buy prices up and up and up. So they're trying to justify the end by a lower construction cost than it actually is and an ARV higher than it was to justify it. And now a lot of those people are in bad shape.
And then a lot of them are basically scared.
Yes. Yes. And we get those calls in our office. They're like, Amy, can you help me? And they're making that noise. I'm like, oh, maybe not.
Well, but that leads to opportunities. If you know what you're looking at, you know how to structure those deals, and that's the beautiful thing about what, seeing Fall, what you're doing, knowing the rehab side versus, okay, what do you have to put into it versus what do you want to pull into it? I think we all know a lot of real estate investors that have gotten into fix and flipping of over rehabbed or over amenitied a property,
over amenitied or worse, they under amenitied sometimes, right? Or they just don't have not just a design eye, but understanding of the marketability of a property to make the right choices in living plan, and just crazy because they don't have experience. They watch Chip and Joanna Gaines on TV and they're like, hey, I can do that. All I gotta do is put shiplap on a wall. I got a house sold, right? And so it doesn't work like that. No, and they learn the hard lesson the hard way. So. We hope to get coaching and mentoring, but not everybody does. So.
No, and HGTV and Flip This House or Flip or Flop does not count as mentoring.
It does not. Thank you. Right? Okay. So, yeah. And I have a lot of friends who are actually on reality TV shows. Like I know them. Like I actually really know what's going on. And then these people that watch these shows, it cracks me up. But it is what it is. That's never going to change. I don't, like in any market. I mean, trading spaces ruined it for us all 20 years ago, and it is what it is.
Yeah, the original Flip This House series.
Yeah, I'm gonna scroll on the wall. Anyway, yeah.
That's right. I only need $1,500. Paint and carpet, we're golden.
Oh, and we're gonna finish under budget and before we thought we would.
So let's dive into some of the things on the systems, because we could talk on the market all day long. But you're also a big part of Riva Global. We had Bob LaChance on a couple months ago. He was just on Note Camp recently talking about some of the systems put in place for us. Bob's a great guy. Good friends with Patrick Precourt as well. You guys make a very a great tripod. A triangle of content and expertise in different markets, making things happen out there. What are some of the biggest system errors that you see from investors out there? Besides, we always talk about what people should be doing, but let's talk about the biggest errors or the biggest gaps that people fail on, especially investors.
Okay. Broad one is just failing to actually do what I call the 4 steps to efficiency. That they try to do everything themselves right? So that's that typical entrepreneurial failure mindset. I mean, some people get it right away. They love execution and they understand that they're not the guy to execute, and they're big idea guys and they find people to execute, and that's great. But a lot of people jump into entrepreneurship and they just aren't really prepared for really what all that means. And so then when they're in the weeds of everything, they just keep growing more weeds, but still trying to cut them all themselves, right? Okay, they're just hoarding.
It's a great analogy there. I love that.
I could just see the guy hoarding my weeds. Right? Okay. All right, so not that kind of weed, but all right. So anyway,
that's West Coast.
Yeah, 420 there. But they try to keep everything internally, and then they end up in a burnout position or procrastinating, or their business always looks like a roller coaster for production. They've got a great deal, then they let every other department fall apart. Well, they get that deal closed, and then when that deal closes, they don't understand why they're in a bad position, so they got to start again, right? Or they're always pushing the mossy rock up the hill, and they're getting smashed, and then they do it again, and they smashed until they give up. Right. So my thing is, number one, on a macro level, like if you're listening to this call today, do yourself a favor after you get done with Scott's show and just sit there with a pen and paper and literally write down all of the things that you're good at, all the things that you're not, the things you procrastinate on, the things that are the most highest revenue generating, most important decision-making activities for your business that you should do. And everything else, we're going to find another solution. And the first solution is you probably should eliminate a hell of a lot of it. Just saying, there's a lot of stuff we all do that we think we should be doing. Should's an emotionally abusive word. I should be doing this. I should be doing that. The reality is you probably should not be. So eliminate a lot of stuff, then figure out what you can automate with technology, then outsource. And outsourcing, I mean virtually. I mean, this is remote outsourcing. I don't care if you hire one of our virtual assistants, although I would love for you to, but just get stuff outsourced. And what's left should only be two things. Either what you should be doing, right? Or what you can delegate to a physical team member on your team. Okay, so that's my macro answer. My micro answer is my number one pet peeve with investors in general and agents and realtors, brokers, or anybody in sales is they don't follow up with the leads they generate. You are literally I could say a bad word, you're throwing money down the drain by not having a follow-up process. Yeah. You'll increase your net bottom line by a minimum of 70% across industry broad if you just add a follow-up sequence. So,
that is so true. I mean, association, American Market Association says that only about 48% of people actually follow up after the first phone call, the first lead.
Yeah.
Totally the same thing with investors. We see people that go to a workshop or they go to a seminar and they get all excited about marketing. They send out a letter blast and then they are scared to answer the phones. I was working with an investor this week and he did an email blast and he had a great open rate to leads. He's looking for some self-storage facilities and email owners. And he had about 20 people that opened the email more than once. I was like, okay, that's a good sign.
Yeah.
That they're thinking you're planting seeds. Call them. Oh no, I can't call them. I'm like,
So if I was his coach, I'd immediately say, okay, we either got a limiting belief in the way there, right? We don't believe in the results, or we don't believe in what we're actually doing, or we need to get rid of whatever fear it is, whatever phobia it is. Sometimes it's just not knowing what to say, but you're right. They don't touch up. A lot of people, they do like, I'll see guys spend $20,000 on a direct mail campaign. Right? And it's a lot of money, right? I mean, cost per acquisition on average in the country is about $4,000 CPA, right? So if you're putting a big direct mail campaign come out and you're not answering the live calls when they come in, that's a number one mistake. You can have a VA help with that, right? They can be consistently answering that phone. Or B, they want the layup. They want the one call, one and done, it's a deal, I'm done. And if they don't get the layup, then they'll say that $20,000 direct mail campaign didn't work. And I'm like, excuse me? I said, first of all, most people are several months away. Remember, sellers are ready when they're ready. So you have to, I always say our bumper sticker phrase here in our office, and I use it all the time in every type of strategy, is I'm ready when you're ready, right? Whether it's learning, whether it's selling your house, I'm ready when you're ready, okay? And I'm gonna stay like on your radar till you want a restraining order against me so that I'm available when you're ready. Okay. And that's the key, because people are going to touch, you're going to touch them multiple times. Most of your conversions are going to happen about the third or fourth potential follow-up. And then you have another pool that are months out that are like follow-ups 10, 11, and 12, right? So you've just got to have that in place. It'll change the game for your business.
Yeah, I love it. I love it. I love it. You're exactly right. Third, fourth, fifth time, 80% sales remainer for the fifth contact out there. I love it. I'm ready when you're ready. That can be for a lot of things in life besides just real estate, right?
Oh, I use it for everything. Let me tell you, it's the most powerful phrase in marketing. Everybody keeps telling me, you really need to make a whole book about that. And I probably am. Nobody steal that. It's mine, because I've been saying it forever. And we even have shirts that say it. So, I mean, it is a really powerful line. If you really think about it that way, then it will help you affect the decisions you're going to make for how you interact with the leads you generate. I don't want to I monetize all effort. I'm not spending money on a lead unless I've got a plan to turn that into money, or it's not worth spending the money in the first place.
Yes, and you're 100% right. So many people will try something but not commit to it, not give it time for those seeds to sprout, for those leads to return, to that follow-up process that they bounce from strategy to strategy to strategy, but they never have any type of success. That's one of my biggest pet peeves of the real estate investor market, is that there's that follow-up doesn't really happen unless you really are committed to it. A lot of people teach a theory, but they don't follow. And that's why I like having you guys on, specifically, because you guys do follow up. You are teaching that. You've put Riva Global together for VAs. And I've been really interactive with Bob and his team over there, getting some stuff put together for our students. That's the key more than anything else, is while we love fix and flip, we love rentals, we love buy and sell property, it really is the media business we're all in, and staying that touch and follow-up aspect of things, right, Amy?
I tell people all that time, all the stuff that you just described, whether I rent or flip or buy notes or buy assisted living facilities or buy commercial apartments, whatever, I don't care, all that stuff, those are all exit strategies, okay? But you're never gonna get to any one of those beautiful exit strategies unless you first on the front end have a kick-ass system to get the leads coming in the door, and then be a really great process to convert them. That has to be a dedicated part of your business. But you just said something I have a pet peeve too about, everybody goes to RIA meetings, they listen to this guru, that guru, they hear stuff, and I have no problem. A lot of them are my friends. But the problem is that, if I could get my hands on all of them to help them as a coach filter their decision based upon alignment with their core values and their life goals, to pick the niche they want to stick with and then rock it, right? If I could just do that, because so many of them will go listen to something and they're like, oh, now I need to go do that, right? And then they'll spend several thousand and they'll say, oh, that doesn't work, because they didn't take the calls or they didn't do the follow-up. And so then they go do another one. And then before you know it, they're saying real estate investing doesn't work. Mm-hmm. I'm like, but that's not true. We know that, but I'm able to look at them and say, wait a minute, but this guy over here is killing it, right? So pick a niche, but make sure that you're prepared, you're disciplined and committed. First of all, decide that's what you want to do, and then be disciplined and committed to converting the business that you generate, and you'll do well. I can guarantee it. I would put $100 on that to anybody that challenged me.
Yeah, no, you're 100%. You've got to align your goal. You got to align what you want to accomplish, what you're passionate about as well too, with what you're doing in marketing and your focus of things. That takes me, to another aspect of things. We've gotten a lot of people that have really expressed a lot of interest in the commercial market space, the commercial real estate aspect of things. When you mentioned a couple things, residential assisted living, or apartments, or self-storage, you talked about office space there. What opportunities, if you're looking at your crystal ball there, look at your crystal ball, maybe it's a Guinness beer. Sometimes we look into the beer and stuff like that to look at our futures here for you. Where do you see the investment opportunities in the commercial space there in your guys' markets and your different areas out there? Are you guys oversaturated in one spot that you think is going to be opportunities for things here in the next 6 to 12 months? Really
great questions. I'll get kind of macro, micro. And we use our magic 8 ball. That's what we use here. I do actually consult that about once a day. I have one on my keychain. All right, so commercial.
Scientific process right there for you, everybody.
Seriously, I told you I ended up with an art degree. So, something went wrong somewhere. Anyway, my science professors are all cringing in their seats right now. Okay, so here's the thing on commercial. So let's first talk about what happened with COVID and some stuff to watch. So in my, opinion, I believe there's going to be a massive default wave. We already have a default wave on the rents, but a default wave for the retail restaurant space. Mm-hmm. Okay. The second wave, I believe, will be sort of some of your large brick and mortar office spaces, your big corporate titans. They're going to tighten up, and they're going to get rid of any peripheral office types environments that they don't need, because a lot of people are adopting the work from home scenario more than ever, or that pool work environment where they have a smaller office, but people only come in half a day to use the same space. Like, those are things that are going to happen in direct response to the fact that people are enjoying working from home. And if that company didn't provide them a great in-office corporate environment or corporate culture, then they're going to either go somewhere else, or they're going to say, sorry, you either let me work from home or I leave, right? So that's going to create a wave in the office space environment. I think there's waves of opportunity coming in storage facilities, co-work, co-share workspace facilities. Assisted living is something that is a powerful space, because that boomer generation, like, this is one of the largest groups of a generation pocket. They all are living longer and living healthier, and that 55 plus community area is really strong, and then the assisted living facility is really strong. And it's the smaller facilities now that are going to be even more attractive than the larger ones, again, in response to the COVID events. So if you're looking for things to invest in there, in the Atlanta market, I would say there's a lot of development opportunities still. There's some infrastructure development need within certain parts of Atlanta. We had something called the Beltline, which, if people understand the Atlanta market, came in, and it really changed the face of our city considerably in a beautiful way. But there's some challenged parts of the Beltline where there isn't any infrastructure support. And so I do mean, ironically, some of that retail restaurant type scenario, shopping and so forth. And so what comes around that? Well, what comes around that are things like gas stations and apartments and townhomes and things like that. So I think people should be paying attention to those opportunities and where they are. Anyway, I don't know if that gives a deep enough answer, but yeah.
It does, definitely. I think you got to be finding a spot that's flexible, I think, is the biggest thing. We've got, the death of the mall. You know what I mean? The big box stores, those getting converted to something self-storage, larger co-working spaces. You got to be a flexible space and be able to kind of pivot when things are going there. Because I think we're going to see a glutton of those things like we've seen in the past.
Yeah, totally a glutton. I love that you said flex. And so I think, same thing. If you can have, multi-work use, storage, retail, like all in one, right? That's going to have some strength and some power. But I do caution everybody, in that course, that retail restaurant side of things, that if you're going to have dedicated space within your flex space for that, you may still have a challenge finding a good, platinum tenant. So, and I would want to make sure that they are, right? So.
Well, and then you look at some of the bigger platinum tenants, some of the bigger staples for your smaller strip malls, like Subway, 20,000 locations, not paying rent immediately overnight, and the pizza places and stuff like that. I think the bigger boys that are the bigger operators, they're going to figure out a way. They buying stuff, they got money cheap enough that they can kind of go through it. I think you're going to see a lot of stuff, obviously, in the smaller operators, the mom and pop commercial owners out there that don't have the resources like we talked about before, similar to the residential side, but being able to come in and that's what I love about the debt space, is being able to come in and buy that debt at a discount, but then working to create some sort of flexible solution for the owner operators, right?
Yeah, we just had 149 IHOPs brought to us in bankruptcy.
Wow.
Mm-hmm.
Wow.
So, and the guy just walked away. He's like, I don't want to do this anymore. I'm just done. As soon as COVID started, he said, I'm done. Right. And these were not unhealthy IHOPs on their financial statements. He just didn't want to have to even deal with trying to figure out how to balance all the cost and expense that he knew was coming in response to the COVID challenge, even though he probably would have qualified for a pretty sizable PPP stimulus. Anyway, so yeah, it's the smaller stuff. You're right. If anybody that's watching the financial markets, a lot of the retailers on the retail spectrum, some of the ones on the bottom, they've already declared they're done, bankrupt, so forth. I know on a daily basis, I hear of an individual restaurant, mom and pop operator end, that are saying, I'm done, we're closed. In fact, I went and hung out at one of my local pubs last week because it was their last night. And so they tried. Right, it is what it is. So, yeah, I did, again, from like a macro statement to everybody, make sure that you're just, again, doing your research and being really well educated on what's coming and what's happening around an area. And if you're going to do any kind of commercial type investment, you've got to be on the pulse of what's coming around it, what's coming in development around it, what's the city backing. Go hang out with the Chamber of Commerce, go hang out with the city development, go to the town hall meetings, go and find out these things, go shake hands with your politicians, go understand what's happening and coming, because that will affect. So that type of investing is not short term, right? It's a longer term deal. And so you want to be very well aware of what of what's coming. So.
Well, and that's the thing, is you've got to plant the seeds. You got to see what's going on, talking to the people surrounding you, and it's not just a, hey, I'm going to do this one thing and I'm going to be made. It's a building. Real estate investing is a long-term play. It's not a get-rich-quick aspect of things. Even though the shows like to say, oh yes, I'm a gamer and I'm an Airbnb or a Uber driver and I can afford $3 million. We're going to flip this for $5,000 and make $1 million.
No, Uber drivers are making a lot of money off me. I'm just saying, but.
Exactly. Yeah. Now, if you look back, and we kind of take this back here, we know you've been doing this for 18 years, so you got started when you were 3. What's the number one? Exactly. If you think back, what was a lesson, one of your biggest lessons along the way as an investor for you in the last 18 years for you? What's one of the biggest things that when you think about it stands out the most is teaching you something more, something it changed the way you approached real estate?
The first two things that came to mind. So I am pretty broad across a lot of niches. I work as a coach as well. I have for majority of my career, and I'm a high level coach. Don't advertise it. It's a purely referral type scenario, and work with a lot of people, different types of businesses. So you learn a lot doing that too. Sometimes I learn more from them than I am from myself. But I would say personally, 2 huge lessons, and I know these are not going to blow anybody's minds as being original and new, but I believe in how powerful they were for me. They still are. One is that you have to find someone to work with as a mentor or coach in whatever niche you're going after and at whatever level you're playing at. So let me explain. I have multiple coaches. I invest in coaches. When COVID started, I hired a coach immediately, specific to the needs I knew I was getting ready to face in order to lead all the different teams that I do. So if you haven't sought someone out that's going to do that for you, that is going to take you where you want to go next, that you've decided clearly and committed to go next, then that will be huge. And for me, those were always the game-changing, where I would have those massive growth changes in my business. It's where I applied having a really awesome mentor or coach. And then the second thing is check your ego. I'm just going to put this out there. Check your ego. Where I've ever made a mistake that cost me, it was where I allowed my ego to make the decision. And by the way, ego doesn't mean big-headed. Ego is also things like being shame or guilt even. That's still your ego speaking. There's a great book called Ego is Your Enemy. If nobody's read that, it can change your life. But I truly, honestly, if I ever made a decision that lost me something, it's because I made it impulsively, or I made an assumption because of my experience. Therefore, I knew, and so I now, as I get older and more mature, I check myself more than I ever have before as to why am I making this decision and where is it coming from. So that's my 2 biggest takeaway things that I know I'm not going to do strategic real estate investing, but I tell you what, that's going to come into play on everything we do. So,
Ego can be a strangler when it comes to success. I think we've all struggled with that. I mean, as entrepreneurs, we're all kind of control freaks and egomaniacs in some sort of fashion. And you're right.
In a way, you kind of have to be a little bit, right? I mean, to play at our level, you got to have a little bit of that crazy, right? that the guy that wants to work the same job for 40 years doesn't have. There's a difference. You are different when you're an entrepreneur. You have something in you that's a driver that's willing to put yourself out there, to take this big risk, to go after something. And that does require a little, like I said, a little bit of crazy, right? But you got to make sure that you check that little guy and make sure how is that driving your decisions, right? You'll thank yourself so much later. You won't end up doing something you don't love because of it. I know a lot of people who make big decisions based on because, well, I heard this was this, I'm going to go be great at it. And then they're miserable 10 years later because it wasn't really what they wanted to do. So, just do that commitment for yourself. Check it.
Yeah. And I love what you said. Finding a coach, somebody you can talk to, somebody that you can share the good, somebody who's been where you want to go, or is that where you're at? That's the biggest thing. I think so many people hire coaches that they're not where they need to be in the long run, right?
Yeah, that's part of it too. Vet out that this is a person that's going to take you where you want to go. And this is all areas of life, right? Like if you want to go be a bikini competitor, then you need to go hire a coach that's trained other bikini competitors and or been one themselves.
That's not going to work for me. So no bikini competitor here. Sorry. All right.
So it's okay. It's good. We can go for another type of competition. But anyway, so yeah, but whatever that is, you want to be the best, hot dog eating champion, then you go find the guy that's won every award for hot dog eatings and be that guy, right? I don't care what area it is. So, I say that not lightly. I mean, if you're worried about your health, you hire the best nutrition coach, right? If you want to seek that out. Don't let your ego tell you that you don't need it. Instead, go find it, and then let your ego allow you to receive what that coach tells you. And by the way, a good coach, they're not nice, right? Like they're not there to be your friend. It's kind of like as a parent, I'm not my kid's friend. I love them. I'm there to be their parent, which sometimes means I'm going to make them do something they don't want to do or don't want to hear. And that's a big part of good coaching. Good coaching will help you hear things you might not want to hear. But that's why you've hired the coach, right? So.
Yeah, you don't want somebody just blowing smoke up your skirt or up your shorts. You want somebody who's actually going to sit there. And I think back to the college coaches, when a college coach stopped yelling at you, you had to worry about things, and then they stopped caring for the most part, right?
Yeah. Oh, I think that's true in relationships too. When someone goes silent, they're done, right? So listen when they're not, because if they care about you, then what they're saying is probably really, really important. And if you've vetted them out and you know that they're of that high value position to help you, then don't refuse to acknowledge the support they're giving you, right? We do it on a lower scale with Reba, right? A lot of what we do is, business owners call us and they're like, well, I know I need to outsource, but I have no idea how or where or what to do or where to start. And so we have to kind of ask those tough coaching level questions with them. And sometimes they don't want to hear the questions because they're like, ooh, now they have to face the fact that they probably should be doing something differently. Right. And so it's hard. So, being a business owner is hard. Being disciplined is hard. Discipline requires oftentimes being outside of your comfort zone. And so what we're talking about here, kind of that's what all that is. And so, but reach out, listen, get that support that you need. And if you can't do a coach, do an accountability group. But even then, make sure that it's members of that group at the level there where you're trying to go.
Great counsel there. Amy, what's one of the things that you like to do to recharge your batteries? Because you're constantly going, managing teams, working with a variety of things. And we have, as entrepreneurs, are pretty easy about burning the candle at both ends, right? What's the thing that you love to do that you recharge, you kind of get away? What's the thing that you really love to do to help you get that in a good mindset? Because we've all got to take a break from time to time, right?
Yeah, little postal moments, those do happen.
Postal moments, I love that.
My team knows. I'm known for having a roar. I don't have a, God did not bless me with a beautiful sweet button. I don't have a sugar coating button. So I tend to be, anyway, but as far as recharging battery goes, personally, and I kind of, as to share with everyone, like find whatever that is. So for me, it's two things. I'm a trail runner. I like to go out and hit the trails. And I oftentimes will do that because I can't be on my phone and do that. And if you're not focused on the trail, you'll end up injuring yourself. So it's a cathartic process because I have to focus, which means if anybody that's into hypnosis or anything like that, I do a lot with NLP. We work in that world. Trail running for me is my hypnotic moment where I'm actually able to close everything else out and just get on laser focus on one thing, which teaches you how to laser focus on one thing, which as entrepreneurs, we got shiny pennies and squirrels going on and everything. So we're always being reactionary and it's exhausting, right? So if you can train your brain to get laser focused, then you'll also be able to do that when you're in a situation with lots of stuff going on around you. And then I have kids. I have 3 beautiful children. So we like to go kayaking and paddleboarding. And so we're usually at the lake as often as humanly possible, hitting the water. And everybody knows that about me if you follow me on social media. So, yeah.
Great stuff there. Well, yeah, you're right. Anywhere you can get to that, you've got to focus on something versus what's going on in the chaotic world all behind us. Anywhere you can turn this off and unplug is one of the most important things these days, because I think
everybody do something, like find whatever that is. I mean, yeah, I can sit here and say yes. I mean, I also read incessantly. You know, I spend every day no less than an hour per day on personal growth. I do meditate every day, or I do what I call my intention setting time. I have a moment where I get quiet and I remind myself of my intention so I can guide my day. I mean, there are a lot of things that I could sit here and list off and say these would be great things to do. But for whatever it is, whoever's listening, just pick something and then start making it a discipline until it becomes a habit, and allow that to make you stronger. That muscle appears stronger underneath the work of what we do, because that you're counting on that thing to be strong, and you wear it out, and your whole business can go to down the drain.
Exactly, and then you are running screaming like a banshee out of the house or the office.
Yeah. I think my teammate behind me, I could see him stealing that and playing that at me during the day.
I'll send Preston one of these.
There we go, lovely. Oh, please don't. Okay. I will find it. I will throw it away.
You know, I've got one that's 16 ways to say the F word too. That's kind of interesting. Maybe I'll send you that one.
Oh, I love that. Yeah, that'd be awesome.
What's the best way for our audience to reach out to you, to work with you, Amy, or you have a specific client that you like to work with, or who people that you like to coach or mentor? What, you have somebody that's an ideal kind of client aspect of that too?
Ideal clients. My ideal client is coachable and has determined what they want. So if you have that very clear, then I may or may not be the right fit, but let's talk. Okay. If you're needing to get a virtual assistant in place, then it's just always two people to get a hold of me. And by the way, if you're also interested in working with us in the Atlanta market, I have a massive team here in Atlanta. We are a true powerhouse. We are just the most unique brokerage there exists. Truly, I get told this all the time by colleagues I admire. So that always like, oh, we are? Okay, cool. Anyway, so if you really want to work with a great group in Atlanta, same way to contact me. Just go through my Riva Global connection. So you can go to amy@rivaglobal.com or go to thinkriva.com and go ahead and schedule a strategy session when it comes to getting a VA in place. That'd be cool.
Perfect. Yeah, guys and gals out there, if you're listening to this or watching this or on our national radio station network as well too, guys and gals, Amy and her team are a powerhouse. Not a better perfect name to identify and classify what she does and her team does, and not only for their clients, their investors, and a whole variety of people they're helping out there. So take the opportunity and reach out to her. We'll have the contact information below in the show notes as well too, but otherwise it's amy@rivaglobal.com. Correct? Was it .com right?
Uh-huh.
Perfect there. Well, Amy, thank you so much for coming on the Note Closer, sharing your insight, your guidance, your counsel in the market and what's going on, and advice for other investors out there.
Yeah, no, thank you so much for having me. Truly, it's an honor. I'm very glad to be here. Thank you.
All right, guys, that's going to wrap it up for this episode of the Note Closer Show. Go out, do like Amy was mentioning, find a real estate niche that identifies with your passions, your long-term goals, and then go find a coach. Go find somebody that can help you get there, who aligns with where you want to go. You don't need another friend. You need somebody who's not going to pull the punches, not going to blow smoke, and then go take the action, give it time for your investment to grow, to put roots in, to grow, and you'll be a lot happier in the long run versus bouncing and bouncing and bouncing like Tigger does all over the place, everybody. So go out, take some action, everybody, and we'll see you all at the top. Bye.
Scott, that was great.